Boom! Yeah, how's it going? How's it going? Yeah, it is I, your boy again, TJ Tarai Jack. And good evening. You could be watching me from wherever you're watching me from. Tonight, we're going to be talking about why the rich get richer. And I'm going to be inviting one of my boys who's called Joe. And Joe, he is actually our fund manager. And we're going to be talking something quite cool, which is all and everything around why the rich are getting richer and potentially why you are not getting richer, right? And how we can also help you in terms of utilizing some of those systems that the rich are always utilizing. Without wasting time, I'm gonna bring in Joe. Joe, he's in the backstage at the moment. And Joe, how's it going, man? And welcome aboard.
Hi, TJ. Good to be on board. It's good to have you this evening, and we're looking forward to a good conversation.
Awesome stuff. Awesome stuff. For a lot of people, they don't know you, Joe. And basically, Joe, you are out in Porch,
Yeah.
and you've come in and just tell us of who you are and what you do. Today, you're looking handsome, by the way. What's going on? Are you nicely
Oh,
relaxed?
very relaxed. Thank you, TJ. And it's a long weekend, but obviously being with
Yeah,
the family, it relaxes a guy. So we're looking forward to spending the next few days just having a good time at home.
that's good. That's good. All right, cool. So, Joe, you are out in Porch at the moment. That's where you are, right? And
Yeah.
what do you do?
Yeah, so TJ, I'm the fund manager for M5, which
Right.
means that I'm there to ensure that we follow a very nicely set out investment strategy for our investors. So Potchefstroom is my home base, but obviously we work around the country. We travel when we need to.
Right.
Properties all over the country. So that's my main role. Family man, as you know, and
Yeah.
happy to be part of the M5 family now.
Awesome stuff. Ladies and gentlemen, I can see quite a few people are on board right now. And I'm going to ask you in the comments, wherever you're watching us from, I just want to find out where you're from. So, Joe, he's out in Porch. Where are you from? I'm expecting nothing less of 20 comments in the chat right now. You do know that I'm in Johannesburg, right? So let me hear, where are you watching us from? Before we just get into the meat of things, which is very important. Joe, have you read this book before? Uh, not my book, right? But this one here. Let me just bring it up. Have you read this book before?
I've read similar books to that. Some of the earlier works of Robert Kiyosaki,
Yeah,
and that actually skyrocketed my career into property. So I'm very familiar with his principles.
awesome stuff. So just like church today, we're going to go through into this book here. Um, we are going through this is Easter, right? So if we're talking about money, we need to be going through to some of the principles, great principles, and this is the reason why like-minded people, they kind of like gravitate to each other based on where they're coming from, right? So if you've never read
Yeah.
this book before, I'm gonna urge you guys, just jump on this book here. I'm sure you can get it at one of these stores. It won't break the bank. But here's the thing that I would just want to speak to you guys around. Joe, before we start talking about the Section 12J, um, I'm going to jump on to chapter 3. And chapter 3 speaks to why taxes make the rich richer legally, right? We're
Yeah.
not talking here about
Yeah.
doing stuff that is not legal. So,
Yeah.
two terms that I'd like you guys to kind of like write down. And I know that you're probably writing some notes. And by the way, I still haven't seen people telling us where they're from. I'm waiting for you. Tell us where you're from. So the two words, the first word is ignorance, and the other one is ignore. So some of you are ignoring me because you're not writing there in the comments where you're from, right? And there's some of you, it is by ignorance, you don't know where the chat is. Yeah? So that's okay. I'm going to forgive you for that. But the ones who are ignoring me, I see you, right? Now, the first definition of ignorance is that it's destitute of knowledge. right? Destitute of knowledge. And then the other one is ignore, which is refuse to take notice of. And I'm going to jump on to this next statement there. The next statement goes on to say, this is a book that I'm reading for some of you who are not, following. Most of us know taxes are our greatest expense, yet most people choose to ignore the subject of tax.
Yeah.
And I'm here to tell you that, ladies and gentlemen, me and Joe today, we are going to be telling you that you can make some money out of tax. Joe, let's just jump into the fact around this conversation of tax, because I think for a lot of us, I'll speak for myself, Joe. I didn't know my tax bracket until I actually left my employer. It is what
Yeah.
it is. I didn't know. It was not relevant to me. I knew I had to pay tax. I knew the money comes through. By the time I was getting paid, tax was gone. So it wasn't really important to me to
Yeah.
actually understand all of those things. But just give me an indication, Joe, of an ordinary guy who is a middle manager in the workplace. What's their tax bracket at this right moment?
A manager in a workplace, a middle manager, would be in a tax bracket of around about 35, maybe 40%. In today's economy. So that's quite it's quite high. It's all these tax legislation and laws, they get quite old very quickly, and people move on and they do get increases, and they fall into a new tax bracket, but the laws doesn't get adjusted that quickly. So you might be in a very high tax bracket, and that's actually not to your favor right now.
Okay. I'm going to jump on to the next topic here, next paragraph. It says, without financial education, most people are financially ignorant about taxes, right? And I want to speak to the point, Joe, with that statement alone, right? Sounds like I'm at church today because I'm reading the book and then I come back. So it sounds like I'm preaching there. So you might as well shout hallelujah wherever you are right now. So without financial education, most people are financially ignorant about taxes. Joe, the reality of our taxes is that we get taxed at work. For some of us who are still in the employment, so me and you were not in the employment anymore, so that's praise the Lord.
Yeah,
And we are now in the space of business
yeah,
and investors, but for some of us, for a lot of our guys out there who are still in the employment, and here it says that without financial education, most people are financially ignorant about taxes. So number one, they're being billed 40%, 30% that you spoke about.
right.
But there's another layer of another tax that happens, isn't that you and I cannot run away from? And that's the 15% tax that we all pay for goods and services. Is that not correct?
Right. Yeah, that's 100% true.
So what does that mean then? In actual fact, how much is one paying for taxes at the end of the day?
Yeah, at the end of the day, you're paying a lot more than a 35 to 40%. You're getting taxed on your goods. You're getting taxed on there's tax upon tax, and if you don't utilize these systems to your advantage, it adds up and it keeps piling up, and the amount that you're left with at the end of the month, that becomes smaller and smaller if you're not clever about it.
Mm. It goes on to say one of the reasons for wealth and one of the reasons for wealth and income inequality is tax. All right, I'm going to take that one again. It says one of the reasons for wealth and income inequality is tax. Simply stated, the rich do know how to make more money and pay less tax than the poor and the middle class legally. The rich are not always smarter, though. They simply prefer not to be ignorant. So they are inquisitive. They work with people like me and you, a guy who's making R1 million, 5 million rand, they
Mm.
work with people like you and me because they can get their taxes and their money is now starting to work for them. That's what the
Mm.
statement is saying here. Um, I'm gonna go on into another statement here, still with the book here. Who are the people who pay the most high taxes, Joe? We've got employees, we've got small businesses, we've got big businesses, and we've got investors. You're the intelligent one here between me and you. Who are the guys who pay more taxes?
Industries that seem to be taxed at a higher rate is scarce services normally. People that's educated at a higher level, tend to fall into a different income bracket, and those brackets gets taxed more than lower brackets, obviously. So that would be, for instance, doctors would fall underneath that category very easily. Everybody in a health profession, legal services, we're looking at accounting, engineers. Every person that's well educated, but also people that's inherited money. That those funds are taxed. Or people that's taking their pension funds. Those money are taxed as well. So you don't have to be a high income earner. It depends on what sort of, you could be in a point in your life where you fall underneath a certain occurrence that happened in your life where you get a pension payout comes your way, or you're part of you inherited quite a bit of money. That
Mm,
pushes you up into a special tax bracket. But originally we're looking at healthcare professions. A lot of government individuals in management positions. There's a lot of opportunity for these guys to you know to to restructure their taxes and earn a full
right.
benefit on it. Yeah.
So Joe, employees at most they get hit how much here from a tax perspective in our country. So me and you, we South African based. Guys from Botswana, if you're watching us or from other different countries, that's okay. You still have tax.
Mm,
Tax is it's a global thing.
mm.
All governments, they need taxes. That's how they survive. In our country, Joe, taxes kind of like what's the highest that one can actually be hit?
Yeah, in South Africa, the highest you'll get hit with taxes is at a 45% tax bracket, which is the highest tax bracket you'll get hit at. So obviously that's almost half your income for the financial year goes towards taxes. So that at that stage you
That
need
that
some professionals to assist you with that.
Okay, so let's work through the guy who's being hit on 45%. So his first initial taxes is 45%, and then thereafter for goods and services that he's still going to buy to make his wife and to make their families happier, they get paid another 15%. So that's now 45 plus 15%. Is that so, Joe? Right?
Yeah, so but the VAT is a tax that it's very difficult for individual to claim that back. So it's mainly the 45% that this person can work with. And
Right, right.
there's a few vehicles for him to utilize to get almost all of it, or in some cases all of it back. But saying that, TJ, we have to say that we work with tax professionals and advisors. You know them personally. We work with them on a daily basis. So
Right.
so we're just transferring that knowledge over to the public right now. But obviously, we're not tax professionals in the sense to give tax advice, but we know the
Mm.
systems and we know some of the procedures that the guys can apply to get the full advantages that we're currently getting.
100%. The governments are always giving tax incentives, right, Joe? But the government doesn't give incentives to everyday people, to employees. Let me say that, right? They normally give a lot of incentives to businesses, big businesses, and to investors, and simply to receive many more tax incentives from the government because the activities that take place in those quadrants, which is the businesses and the investors, which is vital functions that help the government to do its job of improving the economy, providing jobs, and providing food, energy, fuel for citizens and businesses. And yet, employees and small businesses who are hit the most in terms of taxes, they don't get bigger tax incentives. So tax incentives. What are government tax incentives, Joe? Just walk us through that. That simply put, I'm talking to my grandmother here, and
Yeah.
what do we mean by government incentives and tax incentives?
Yeah, so originally there was not a lot of incentives for individuals to take advantage of when it comes to your salary. You either had an option where you take an annuity, or you can have some other small deductions on your salary, from your taxes.
Yeah,
But compared to business, and that's a very small percentage of advantage that the individual that's a taxpayer, a high income bracket taxpayer can actually utilize. In business, you've got many expenses that you could, you can actually declare and actually reduce your taxable income and still have the benefits of all those advantages that you're utilizing. But for a person earning a salary, working for a company, you're not left with a lot of options. And that's why we're playing in the Section 12J field, because that opens up a lot of options for individuals.
Joe, what is the Section 12J?
Yeah, so Section 12J was legislated by the South African government to incentivize South African taxpayers to invest in local companies and to receive a tax deduction up to 100% of all the taxes. So if you were paying 200 or 300,000 rand in taxes for the financial year, this incentive by government enabled you to actually get a rebate on all those taxes, and those taxes getting paid back to you in the financial year. It's a tax-free structure, if you want to call it that.
Okay, Joe. So basically, simply put here, the Section 12J, it's a government-initiated project. It came through from the Treasury. For some of us who don't know the Treasury, I don't have any cash on me right now. But I wanted to show the governor. Our governor works for the Treasury, right? I mean, that's where he reports to, and he's the guy who signs the money, right?
Absolutely.
And that's the treasurer. So the treasurer said they're going to implement Section 12J, and they're going to give incentives, and that's how the Section 12J became instituted. But what was the thinking behind that? Why did they do that?
Well, the reason for that was to encourage the establishment and growth of small businesses, micro enterprises, and actually give funding to companies and businesses that wouldn't otherwise have gotten these funds to grow their business with. And that was the idea behind Section 12J, is to grow the economy and create job opportunities.
Oh, so there is some job opportunities here, and when I hear that, I get excited, because a lot of people want to start companies, but they don't know the headaches that comes with companies. But if one actually invests in a Section 12J, they're literally becoming a small boss here without having the troubles of managing people and things like that, because the Section 12J allows you to be an owner in it, isn't it?
Yeah, absolutely. So that it gives you the benefits as if you were running your own business, and obviously the returns that if you were to run your own business, but you're still just benefiting from the tax incentives that government has put in place for you as a normal taxpayer in the country. So absolutely, yes, 100%.
Awesome stuff. Joe, I'm going to stop here for a bit. I just want to see how far we are in terms of the people watching us. I see some people there from Pretoria. Hope, how's it going? Mtata. Oh, I went to Mtata in one point, Joe. Did you know that?
Yeah, really.
Yeah. The days that I used to fly to Mtata, it was nerve-wracking because it was a flight of around about 12 people, and you could hear the engine in your stomach, when it's going.
Yeah.
Those were the days. East London, how's it going? Vidbank, how's it going? Middle Plus, how's it going? And guys, if you do have any questions, especially around the Section 12J that we're talking about. So at the moment, Joy has just explained what a Section 12J is, and the benefits that it comes with, right? So Joe, let's jump into those benefits, right? So if a person like Lerato, Klali, and Siabonga, and Sam, these are the guys that are watching us right now that I'm just mentioning, and Levens, and if for instance, let's just talk to Siabonga. Siabonga earns R1,000,000, so potentially he is on the 40% tax bracket. To what benefit is it to him, right, to invest in a Section 12J?
Yeah. So, teacher, to answer that question, there's actually a very large benefit for a person in that tax bracket. So, a person earning R1,000,000 a year that's under a 40% tax bracket will pay in an amount of 400,000 rands worth of taxes for the financial year. So, we will make it possible for that individual to actually get back that 400,000 rand from SARS by utilizing a Section 12J company, which we are. And issue that person with the right certificates to enable SARS to repay back the 400,000 into that person's bank account.
So Siabonga, you might be just saying, TJ, I don't have R1,000,000. Let's just assume you've got 100,000, okay? And if you got 100,000, the same principle applies. And Joe, what basically he's saying here is, for whatever you're going to invest in a Section 12J. By the way, we are not the only people who have a Section 12J. We're not the only company, right? There's many companies out there that have Section 12Js, and the principle is the same, right, Joe?
Yes, exactly. There is quite a large amount of Section 12J companies out there. The biggest advantage that we have over those companies is that we offer individuals investments from a low starting point. Normally you would have to have R1,000,000 to invest in a Section 12J. With what we've set up for investors, we haven't that barrier. We've eliminated that barrier for investment and brought it down to a very low figure, as you're aware. So we brought it down to about 50,000 rand as an entry point to invest in the fund and still reap the benefits of those taxes being paid back to you. And that's what we're proud of for achieving. A low barrier or entry point into the fund.
Okay, awesome stuff. So you could be watching from wherever you are watching us, and you are wondering, so I want to invest in a Section 12J. How much is it? And you've read somewhere else that it's R1,000,000 plus. With our Section 12J, the minimum that you can invest is 50,000. On your 50,000, Joe, what is their return? How much money can they actually make? What's the maximum return that we can offer them?
Yeah. So, TJ, on a 50,000 rand, it depends on if that person is which tax bracket it is. But normally if it's a 50,000 rand, they can earn back 20% of the 50,000. Well, it's 20,000 of the 50,000, which is the 40%. The 40% example as before. So if the person invested 100,000, then that person would get back 40,000 of the 100,000 just by the taxes alone, and that's not even the growth of the investment. So that's the 40,000 he will get back as part of his taxable income for the financial year. So if that gives him good.
Awesome stuff.
Yeah.
Joe, thanks a lot on that one. And I think that's important. I want us to come back to it. But ladies and gentlemen, wherever you're watching us from right now, we've got a YouTube channel, and on our YouTube channel, all you need to do is click on the subscribe button, and from clicking on the subscription button, turn on the notification so that whenever we go live and we're having these important discussions, this is about taking back your money from SARS, right? A lot of you're always complaining, SARS is eating my money. This time around, you can eat it back. That's what it basically means, right? Yeah. But Joe, hold on. So someone invests in a Section 12J, they put in 100,000, right? What do
Yeah.
they get in return? Like, what does it matter to invest in a Section 12J, and what do they get?
To invest in a Section 12J, not only your tax rebate that gets paid back to you, but you also get a
Yeah,
share certificate that's associated with the Section 12J, meaning that
right.
you own a portion of a very successful investment company that invests in property and grows your money on a yearly basis. So not only do you get your taxes back, but you also get great returns on your monies per year.
Amazing. So let's just wrap it up, Joe, here in terms of the benefits that the individuals are getting, and this is Siabonga, who is out in East London here, that we are giving in as an example. I'm sorry, Siabonga, I'm picking up on you here, but I just had to find someone, to make an example. So what we are basically saying, 100,000 invest in a Section 12J, the likelihood of you getting up to 45% is very high, depending on your earning bracket. That's number one. So you getting in year number one, you getting up to 45%. So that's about 45,000 that's coming back to you. If that money is coming from SARS, it's not coming from TJ, it's not coming from the fund, it's coming from SARS, right?
Yeah.
100%. Good. And then on top of that, you still own your investments with our fund, right? So, which basically means that for the horizon of the next 5 years, and I say this for the next 5 years, is that when you invest in a Section 12J, I want to use the term the money is locked in, right? It's a familiar term. We all know that. So, which means that you can't withdraw this money, you can't sell your shares. So, for the next 5 years, you are in a relationship with us, and that money is working for you. So, for that whole period, Joe, someone could ask me, "Hey, Joe, you guys are saying that I'm gonna get up to 45%. Okay, great. I like that.
Yeah.
But what about the remaining part of my 5 years?" And when we did the calculations the other day, me and you, we were talking about some deals, and we actually realized that for the horizon of the lifespan, we're talking about a 7% return on their money. So whoever you are, you have a potential earnings on your capital of up to 17% with our fund. So go and check out there, whatever fund it is that is in a Section 12J, and let me know whether there is any Section 12J that is going to pay you up to 17%. And we'll compare apples for apples. And if that's the case, yeah, you can go there. But at the moment, right now, we think we are the highest yielding Section 12J available in the country. Is that so, Joe?
Yeah. So currently we actually not over promising and under delivering. So what we're doing is we under promising and we're going to over deliver at the end of the day. So we're looking to take that 17.5% and grow it each year. As thoroughly as good as possible to get the highest returns for our investors. So they
How would you grow that, Joe?
Yeah, we're very lucky when it comes to our industry that we're in, where we get rental incomes gets raised on a yearly basis.
Okay.
So we're very lucky when it comes to that. That the same rental apartment that you ask 10,000 rand last year will increase by 10% or 8% for the year. So that's a great increase on year returns. And those returns gets also directed back to our investors, and they also reap the benefits. So that's a very important point we need to point out, and so we're sharing in the good news, and we're sharing in the wealth, and if good things happen, we share it all around.
Awesome stuff. So Joe, I just want us to go into the comments again. I just want to make sure that I'm not missing any questions that are coming through. Ladies and gentlemen, if there is any questions around the Section 12J and you want to ask a question and something is not clear that we're talking about here. And the reason why me and Joe started actually having this conversation is that the moment we started going into public, we actually realized that a lot of people don't understand what the Section 12J is all about. So these are educational conversations that we want to have. And if you're not so sure of something, don't be shy. Ask the question, and we will answer it. And by the way, if you ask it, actually you could be asking for someone else as well who might be wanting to ask the same thing, but they are shy or they don't know where the chat is. We are in the COVID space, so we are doing our best in terms of educating you via online. So Joy and I, we're going to be doing many of these sessions. But in the essence of it, Joe, at the end of the day, the Section 12J, what does it invest in? So our Section 12J, what is it going to invest in?
Yeah. So, TJ, to answer that question, it's student hospitality and aquaponics. So those are the two highest growth industries. Student hospitality being an asset-based investment, it
Right.
secures your money in such a way that it takes the risk out of the whole proposal and the whole investment. Property is that's how property is based. Is property is the lowest risk investment that you can get. So student accommodation is property based. So that we invest in that industry. Aquaponics, farming, quite a niche growth area, good returns, very healthy. So we identify those two areas as high growth areas for the fund, and that's why we're investing in this.
For some of you, you might not know what aquaponics is. That's okay. I only started knowing it recently. And I had the pleasure to write it on the board the other day, and I got the spelling correct of aquaponics. And basically what it is the farming of fish and your everyday vegetables in water. No soil, nothing of that. So it is really 100% for people that are, got allergies and things like that. There's no chemicals in our farming. And we really are farming at the optimum level of quality product in terms of those produce that will be coming out. The produce that is called fresh produce. I'm talking about your tomatoes. I'm talking about your lettuce, your cucumbers, your everyday vegetable, and that's what we are going into. Joe, we're speaking as if we are going to started this thing about the Section 12J. But that's not the reality. We have closed a few deals and the Section 12J is functioning. Our latest deal that is out in Potchefstroom, you are busy with it together with our property management team, which is My Student House. Just give us a short snippet of that property. How big is the property? How many students are going to be in it, and how many students have you already placed on this on that house? And this is your latest project, right? And people can literally invest into. And then I'm gonna go into answer one or two of the questions there that are coming through. By the way, if you wherever you are, you can still ask us questions and we can answer them. I'll go into the comments in here, read them. I might not be the clever one to read it. Joe took the test of being a fund manager. I didn't take it. So Joe will be able to answer that question. But Joe, let's talk about this property that we've got in Poch. For some people that don't know where Potchefstroom is, it is the place that gave me COVID, but I'm still around. So don't worry. But Joe, tell us this place called Potchefstroom in this property that we have.
So teacher, the reason why we identify this property is because of the university, and Norwest University has had a reputation for many years of being a very good and stable university. And so that stability gets transferred to the surrounding properties as well. So it means that property prices in the area is very stable. It's there's a lot of demand for property in the area, and that demand hasn't gone down in the last 50 years. So it's a time-tested area that shows that it's the right place to invest. So what we did is we actually picked the best properties in the area. We started off with the one property, which is a jewel really in the whole area, because it's 1,800 squares. It's a property that can house. It's fully booked out, fully letted. All the students is in. It's currently 17 students that's in the property. When we bought it, there was only 5 students in the property. So we really did a good job to optimize it for our investors. And when we'll finish with the property in a year's time from now, we'll look to increase those tenants to be around about 25, 26, maybe 27, which will always be good for the fund and growing the investments for our investors. So we're looking to go double story in that property. The property it's got a heritage associated with it. It was one of the first buildings in the area back in the day, so that's why the stand size is that nice big stands that you normally don't get everywhere. And but the nice big stand opens a lot of opportunities for us, because we've got a lot of area to further develop that property and reap the benefits of the large size that comes with the property. There's a lot of growth opportunity in it.
Yeah.
We renovated the property recently. Everything is new. It's got new beds, new cupboards, new paint, new ceilings. We structurally checked the building. We really went the whole 9 yards to make sure this property is just perfect in every sense of the word.
Awesome stuff. Thanks, Joe, on that feedback of that recent project that we've got. Our aquaponics farm is it's just about to take off. So there is plenty of opportunities where you can be investing in. Now, let's assume. I know that you want to get involved. I know you want to get your money back from SARS. So let me wrap this up. Right, you can invest in a Section 12J. The minimum is 50,000. That's number one. Number two, depending on your tax bracket, you can literally be getting up to 45%, and that money will come through to you directly hitting your bank account. Overall, what we are saying here is that a Section 12J will allow you to invest in a Section 12J. Your money is locked in for the next 5 years, and obviously you reap the benefits, and then reaping the benefits of up to 17% on your income, on your capital that you are investing in a Section 12J. So the question that you're probably asking now is, TJ, so how can I get involved? Where can I get a hold of you? Can I send you a WhatsApp? No, don't send me a WhatsApp. You can send me a WhatsApp if you got my number. But in the comments, there is a link there. And simply put, it does say it will read up something to the effect of m5varsity.com, M5 Fund. And I'm just going to throw that in the comments. There it is. And for some of you who are wanting to invest, I would say register here and let us know how much you are wanting to invest. And obviously, we have had this conversation. If it's still clear to you, there's a few questions that we are going to ask of you. Answer those questions. If you are ready to invest, say, yes, I'm ready. If you're wanting to have a conversation, say, yes, I'd like to have a conversation. And either myself, Joe, or someone else from the office will definitely give you a call, and then we can take it forward from there. Joe, any closing comments from your side?
Well, TJ, I think we covered quite a few very important points. Something that we just add to the mix here is that being a Section 12J company means that you are a registered FSB and VCC company. This is a very important point because it means that you've been through the registration process and that we are able to accept investments and direct those investments to grow for our investors. So very important, we are registered, and that's a very important point. That this is that differentiate us from any other investment company out there. You know, it's having your FSB number, VCC numbers, quite crucial for part of your process to consider who to place your money with.
Awesome stuff. So, ladies and gentlemen, on the comments there, I am just going to put in the link where you can literally click on it. And myself and Joe, we are not going to be working Sunday, Monday, but definitely on Tuesday morning, expect a phone call from us. But we thought, let's come out on this Tuesday evening. This is a family time, but we thought, let's come out and let's have this conversation. So I really appreciate everyone who's come out in good numbers, you know, to listen to us today and understand what this is all about. And to guys that ask the questions, so thank you very much for asking those questions. And we will see you, and we want to journey with you within the next minimum of 5 years. Someone asked me the other day, Joe, what happens after 5 years? And I said, well, the fund continues. So me and you, we continue to be partners. We continue to be making money. So it's not, we're not really saying minimum of 5 years to invest and that's it. You can, for as long as you're reaping the benefits from our side, you can literally be with us. You know, you might not need to sell either your shares or anything like that. So Joy, how's the weather there in Posh tonight?
Well, it's quite nice weather over here. You know, it's a little bit chilly. We're thinking the weather is around, or the winter is around the corner. But you know, it's I think it's a little bit on the colder side compared to you in Joburg, I believe. It's a cold place, Podge.
Yeah. It's been a bit nippy here and there, but it's a good day. If the weather continues like this, I might just throw in a braai, a lekker braai over the weekend. I'm not normally a braai person, but my wife loves it. So I might just throw in there to get some brownie points. You know what I mean? It's over the holidays, so I need those brownie points, man.
Everybody needs them.
All right, good. Joe, you take care. And to anyone else who's joined us, again, a very big thank you. And we will definitely get back to you from Tuesday morning onward in terms of your investments. And we'll catch you on the next videos.
Thank you.